you bring a good point that, should we give them credit for being a tech company? And the answer is today, no. But if they keep doing what they're doing right now, a year, 2 years from now, I think that more investors will, and that will move the multiple and the stock higher.
Hey, I'm Stephen, and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in today's video, we're discussing Tesla stock, its current valuation, and where I see it heading over the next few years. Spoiler alert, although I'm sure this isn't going to surprise too many of you folks, I think it's pretty clear what I believe is going to be happening with Tesla stock in the next few years, by the way. Check out the link in the description if you'd like to pick up your own Tesla stock to the moon merch, shirts, mugs, hoodies, etc. Helps out the channel and is sure to start some interesting conversations. In today's video, I'm going to be reacting to some comments from a Tesla stock analyst, fairly smart guy by the way, who believes that the stock is currently overvalued, but with a longer term horizon may actually be a great bargain. And I'm also going to take the opportunity to roast one of the dumbest Tesla short sellers in the history of planet Earth. Did I say that out loud? That's probably a little bit harsh. Anyway, let's get into it. If you love crypto, stocks, and free stuff, or just want to help out the channel, check out these great offers. BlockFi are launching the world's first Bitcoin rewards credit card. People in the US can earn 1.5% Bitcoin back on every purchase with no annual fee using the BlockFi Bitcoin rewards credit card. Check out the link in the description. And for a limited time, you can get up to $250 in crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. And if you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $300 just for opening an account. And if you make an initial deposit of $5 or more, you'll get a second free stock valued up to $2,000. Seriously. Free stocks? Yes, please. And finally, if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also linked in the description. Thanks so much for your support, guys. Let's get back to it.
Tell me why Tesla should be valued where it is.
Well, today it shouldn't. I think that the panel appropriately outlined the valuation concern.
Right.
I share some of that valuation concern. I do believe that ultimately this can be a much bigger company. And if you look at a 6.5 multiple for a hardware services and Apple type multiple on this, today off the revenue, it suggests it should be worth $450 billion. But if you take their guidance today for 50% growth, and I think this is an important piece to the conversation, and you go 2 years forward on that, you have $1 trillion company.
All right, let's just stop right there and have a chat. This is actually a really important point. I agree with Gene Munster in that based on today's metrics and where Tesla is at today, you could say the stock is, quote, overvalued. However, if Tesla continues to execute, as I am sure they will, it's actually a damn fine bargain, in my opinion. What matters far more than where Tesla is at today, what their margins are like today, what their business looks like today, is what it will look like tomorrow. And by tomorrow, I mean in multiple years' time, 2 years, 5 years, 10 plus years' time. And if you're an informed investor who really understands this company, you have a key advantage over the people that don't. You can see further out into the future. What matters isn't what Tesla's doing today. Your investment horizon allows you to see further into the future and understand more about the company, the types of revenue that they'll be doing, their margins, these types of things, their overall profitability, other business lines, and envision where the company will be at a later point in time. You can have a huge informational advantage. This is my perspective on Tesla stock today. In my opinion, Tesla stock is the biggest bargain in the stock market that I currently know of, period. If we look at just one aspect of Tesla's business, their progress in terms of manufacturing techniques, technologies, and costs, we see a staggering rate of progress. Tesla are doing things that no one else in the automotive industry has ever done before. Gigantic gigapress, huge cast pieces, deleting hundreds of parts and processes, involving cutting-edge material science. We've also got the octo-valve heat pump, a stunning example of engineering, truly mind-blowing, something that anyone else in the automotive industry could have done, yet didn't. So the idea isn't to look at Tesla today and go, well, that's where they're going to be staying. No, the idea today is look at the rate of progress, the type of innovation, the things that Tesla are doing, and project into the future. Infer what that means. Where will Tesla be in 2 years, 5 years, 10 years' time? And then consider that, come back to today and go, you know what? Is Tesla, when I factor this in, something that other people may not even realize about the company that they may not be able to infer? Is Tesla a bargain or is Tesla overvalued? And we're just talking manufacturing. I could go down every other aspect of Tesla's business and we see the same types of incredible progress, including things that people seem to be overlooking entirely. When was the last time a Wall Street stock analyst talked about Tesla being an artificial intelligence company? I don't think it's ever happened. That's worth considering. So what it boils down to is this. It's not about is Tesla stock overvalued today? F*** today. It's about what will Tesla stock be worth in the future? And if you can clearly see things that other investors are blind to today, unless you're tripping balls, this is a huge advantage.
To answer your question, I think that this is the definition of a growth stock that needs to ultimately, that's probably a year ahead of itself. But ultimately, I think it's going to get there. And I would just point out a couple quick data points here, is that the growth in the quarter, 122% delivery growth off of an easy comp a year ago. The auto industry grew at 55%. So of course, competition's coming, but they seem to be bucking the trend. Separately on this margin, and Tim's point about the profitability, I absolutely agree. This company needs to prove that it is a tech-like margin business. The margins this quarter, ex credits, as Phil mentioned, was 25.8%. Last quarter was 22%. They did that despite ASPs being down 2% and a higher component pricing environment.
Just a couple of things. First of all, Gene correctly pointing out there that Tesla managed to improve margins despite having a lot of headwinds, higher component pricing, etc. But interestingly, Gene's terminology there that this company needs to prove that they're a higher margin business. This is where the opportunity lies. Some investors are sitting back waiting for Tesla to prove that they're eventually going to get to ridiculous profit margins. Other investors seem to be able to deduce and infer based on what they're seeing today that that's actually an inevitable outcome, and therefore these investors are seeing Tesla stock as dramatically undervalued, whereas the people sitting back waiting for Tesla to prove themselves, well, guess what's going to happen? By the time Tesla proves that they've got ridiculous margin, Tesla stock has already headed to the moon.
And so I think what you're seeing is they're not there yet. This requires investors to look beyond the current year. But if you take the trends that they're having in margins and the demand piece and put those together, I think you can build a case that this can be a much bigger company, albeit a bumpy ride there.
Completely agree there. Gene Munster's saying that he believes if you put these pieces of the puzzle together, and of course Tesla continues to execute, they could be a much bigger company. And I absolutely agree. Like I said in a recent video, I see Tesla stock increasing about 5 to 6 times over the next 5 years. And obviously going out a decade, the sky is the limit. In fact, the sky's not even the limit. Mars is the limit.
So I think that point is really key, Gene. The part about they expect 50% average annual growth in vehicle deliveries over a multi-year horizon. That is a growth multiple. So basically, you think just the margins have to catch up, and then you can back into the multiple they have today.
Well, they need to continue to grow, so they have to deliver on that. They're doing that this year, but ultimately, if they can do that for a couple of years and keep margins where they're at, I think that investors will start to get comfortable. And this is the beautiful thing about Tesla and having an opinion on it is one camp, very smart camp, says competition is going to erode. Another camp, the camp that I'm in, says this is a large market and they can lose market share but continue to grow at 50%. And I think that the stock will be rewarded for that.
And now it's time to hear from an incredibly smart Tesla short seller, Tim Seeless. Wait, is that his name? Seeless? Seymour? Seeless? Definitely Seeless. All right, let's hear what he's got to say. And just to provide some important context for who exactly this Tim fellow is, we can see a tweet here from everybody's favorite class clown, Gordon Genius Johnson, replying to somebody, "Guy, you're doing God's work. Keep it up." To which Tim Seymour replies, "Indeed, Gordon, as are you." And then hashtag Tesla and preach. So obviously suggesting that Gordon, being so bearish on Tesla stock, is doing a great service to investors the world over. Tim Seymour clearly drinking the Tesla Q Kool-Aid. Further, Gordon Johnson talking about the fact that he received threats. This is not cool, people should never do this. But interestingly, Tim Seymour responding here, talking about people making threats. I do believe it, and it comes from the top over there. We know that. The irony of the tree huggers being more aggressive than the ones they lament. Now, I understand this. People should never be threatening people. Don't be a douchebag. But interesting to note that Tim Seymour uses the derogatory term tree huggers. Does this sound like somebody whose emotions may be involved in their decision making for some reason, perhaps has a negative view of certain people who, for example, might support electric vehicles, clean energy, these kind of things? Just asking the question. If you're a daily viewer of this channel, you'll definitely have seen my recent comments regarding the basement-dwelling, self-hating adult versions of Tesla Q making very poor decisions and misunderstanding Tesla because, instead of using logic and reason, they're being driven by their emotions. Could this be the case for Tim Seeless? We'll find out.
Hey, Gene, it's Tim. So FSD, yeah, maybe at some point, very high margin business. That could be a big part of the business. But what we're really talking about, and even Melissa alluded to the 50% growth, at least in terms of units. And then we talked about that the essentially the profitability of the core business is not that of a tech company, but we're still talking about an auto company. Even what you're talking about, how about the stuff that's been applied to this story for a long time around either some of the data, some of the technology, and obviously the battery? That's the part that to me is where the bulls have really fallen back on all the time and said it's not really an auto company. So can you talk about that? Because all we're talking about today are the margins of an auto company.
Oh, poor Timmy. Still thinks Tesla is just an automotive company. Just can't get beyond thinking that they're just an automotive manufacturer.
Well, first, they have to continue to show these margins and move them from 25, 26% into the mid-30s, mid-40s over time. So to answer your question, I still think auto is a big piece to it. And there are other pieces to it. You could talk about what they're doing in energy capture and energy storage and potentially robo-taxi. There's these different things that you can bolt onto. But I'm just, at least today, I'm taking a step back and just saying, let's just focus on that auto business. And you bring a good point that, should we give them credit for being a tech company? And the answer is today, no. But if they keep doing what they're doing right now, a year, 2 years from now, I think that more investors will, and that will move the multiple and the stock higher.
And now let's rewind the clock to November 2019. The same month, I started this YouTube channel with the primary goal of trying to point out what I saw as an enormous opportunity in Tesla stock. Spoiler alert, the too long didn't watch. Hey guys, I think Tesla stock's going to the moon. Just wanted to tell everybody before it actually happens. And of course, well, let's look at the Tesla stock price chart since November 2019. So here's where I started the YouTube channel. I think generally speaking, we would say that Tesla stock has done okay since then, up about 1,000%. Decent. I mean, could have been better, but relatively decent. And at the exact same moment, I was like, hey guys, Tesla stock opportunity. Tim Seymour was, well, very publicly and openly short Tesla stock, still stuck with his reasoning, believing that they're just an automotive company, blinded by his emotions, in my opinion. So let's see where Tim Seymour's thinking, or maybe lack thereof, was at this particular point in time, because I think as stock investors, we can learn something from this. 1, emotions can cloud our judgment, and 2, when new information comes to light, it's okay to change your mind.
Walk us through. You're short Tesla. What do you do when a stock is up this much in such a short amount of time?
Now guys, I'm going to put a graphic up on screen showing the Tesla stock price chart with an arrow pointing out exactly when this particular piece aired. They're talking about the fact that Tesla stock had made a big run prior to this piece going to air. Well, it turns out that big run up in Tesla stock was absolutely dwarfed by what happened after this piece went to air. Ouch.
You're a long-term believer in the bear case, but in the meantime, it's a painful short.
Well, these are great questions because, first of all, with a stock that's this volatile, I would never put a hard stop on it. People say, hey, where's your stop? I mean, you don't put a hard stop on a stock that moves 20% of the clips. I'm short somewhere around 310, 315. To me, what I think has happened since that the last number that we saw with a huge cash balance, with the profitability, the stuff we've never seen before in the company, I don't suddenly say all those things that I'm worried about with their balance sheet go away. I mean, they have.
But they lessen because the ability to raise cash is greater now,
Of course they do, but
Holy shit, Tim, where do we even start? So, oh man, this is hilarious. Poor Tim there disclosing, embarrassingly so, that he didn't even have a stop loss on his short position, meaning his potential losses literally unlimited. And we saw from the chart what happened to Tesla stock just after he disclosed his short position. Even funnier than that, though, is the fact that Tim's talking Tesla stock's gone up now because it had a massive quarter, surprised me, huge profit, new information, yet Tim then starts trying to rationalize why he shouldn't change his thesis whatsoever just because Tesla has surprised him with a huge profitable quarter. The anchor there also trying to say, well, Tim, doesn't this change your thesis a little bit? Tim was believing that Tesla would go bankrupt, they won't be able to raise capital. Well, now they've had a huge quarter, they've got a lot of money in the bank, the market cap's even higher. Shouldn't they be able to raise capital easier, Tim? Shouldn't that change your thesis at all? And now Tim tripping over himself to justify once again why no, his thesis shouldn't change whatsoever. In my opinion, again, clouded by emotions, no reasoning or logic present whatsoever.
A squeeze in the stock that may be coming about them actually overcoming balance sheet concerns, which I don't think they have, because again, I look at the net interest income of last quarter, and it doesn't tell you they had that much cash on balance sheet the whole quarter. It tells me they pulled a lot of levers to get a lot of cash in the balance sheet the last quarter.
Can you believe this guy? Instead of accepting that Tesla had a fantastic quarter, he's trying to justify the fact that this is a one-off because, quote, Tesla pulled a lot of levers to have this great quarter. Like, this is just incredible delusion. It's embarrassing to see. The poor fool is trying to justify why he should still be short this company instead of looking at the information before his very eyes. It's sad.
But the reasons why you'd be really concerned about this stock is if you actually think the company's executing so well that actually the valuation, which makes no sense anyway, even if they were executing and did have a balance sheet, is going to go to another level.
You can't make this up. Tim Seymour, they're saying that the only reason you'd be concerned being short Tesla stock is if they were executing extremely well, and by executing well, the stock would go to another level. So let me ask you guys a question. I'm going to put a graphic up on screen showing Tesla vehicle deliveries up to the point at which this particular segment went to air. And I just want to ask you a question. Can anyone notice a trend? Just overall, is there a trend that you can see based on this data that was available to Tim at the time he was still short Tesla stock, concerned that they wouldn't be able to continue executing? Is anyone else noticing a trend here, or is it just me?
First of all, is it a car company? Is it a tech company? Is it a data company?
Yes.
I mean, this is what I struggle with all the time. So the valuation makes no sense.
But you're still short.
I'm still short, and I'm not drowning. I'm not drowning in a short. I mean, first of all, this is a short that's well sized. A lot of this has been played through the option market. But to say that you put a hard stop on it and being in the whole 15% on a Tesla short is not something you lose sleep over. It's just not.
The problem is if it were a risky short, you have unlimited risk to the upside. The stock is up 60% since October. It is overbought, but it hasn't unwound the overbought yet. So either the stock has to come in or it's going to unwind the overbought, and still you have a 22% short interest. So this could go higher than up 60% in a month.
So go higher or unwind?
It is an overbought, right? We know that June 3rd low, 175. Here it is, 300. Even if it's going higher, the path higher, more likely than not, passes through a lower price. Give back, check back, sell off, dip, whatever word you like. That's what's due.
Quickly.
Implied volatility is always important. This is high volatility. This is high volatility on a stock that's gone higher. So you got to be very careful when you're playing the options.
Boy, oh boy. Practically the entire CNBS panel there trying to warn little Timmy that maybe you should at least have a stop loss. It's incredibly volatile. You've got to be very careful playing the options market. Doing their best to say, Tim, having a sizable short position on a stock like this that could, I just maybe be careful, Tim.
You got to be very careful when you're playing the options.
So the question is, did Tim heed their warning? Because in the following months, Tesla stock literally went to the moon. At the time they recorded this, Tesla stock around $349 per share pre-split. A few months later, Tesla stock over $1,000 per share, basically a tripling from where it was. Let's see what Tim had to say at that point in time.
Thank you very much.
Kathy Wood of ARK Invest. From the bull, we go to the bear. Tim, you still short?
I'm sorry. So I think you were calling on me.
Oh, man. That hurts to watch. But I'm going to watch it again.
Thank you very much.
Kathy Wood of ARK Invest. From the bull, we go to the bear. Tim, you still short?
I'm sorry. So I think you were calling on me.
Sorry. So I think we can infer that Tim was probably still short Tesla stock at the time that Melissa Lee savagely asked this question. So the stock had basically tripled since Tim had arrogantly been on there saying no need for a stop loss. There's no way the stock's going higher, blah, blah, blah. Completely disregarding all the warnings from the folks on the panel months earlier saying, hey, Tim, no stop loss. I mean, pretty volatile. Be careful, dude. Well, the lesson here, quite simple, guys. As we saw in the recent clips from Tim Seymour, still very bearish, still saying Tesla's just an automotive company. Still, his judgment completely clouded by emotions, in my opinion. Between November 2019 and today, we've seen Tesla make enormous progress and continue to execute at a phenomenal rate like no other company ever before them. Here we are over on HyperCharts looking at the progress Tesla has made since that original self-immolation from Tim, which was in Q3 of 2019. And again, can you guys tell me, are you noticing a trend between Q3 2019 and the present moment? Maybe it's just me, maybe I'm hallucinating, but I seem to be noticing a trend. Even if we look at Tesla's revenue, once again, there seems to be a little bit of a trend here. Even if we break down revenue and operating income from revenue, gross profit, and operating income, notice a trend. We've got negative operating income in 2017, then some positive operating income in 18, a couple of negative quarters, then positive for the last 7 or 8 quarters, and of course, massive increases in revenues as well, and increasing gross profits. Maybe net income. How about we just break it down to net income? Anyone notice a trend? Spoiler alert, it was negative over here, and now it's not negative anymore. In fact, it's massively positive. Margins increasing over time as well. Maybe we can look at cash flow again. Free cash flow, negative in 2017, some positive in 2018, 1 or 2 negative quarters in 2019 and 2020, and now we see nothing but positive free cash flow, enormous operating cash flow as well. Maybe we just look at Tesla's cash balance. I mean, again, can somebody please point out, is there a trend here? Is this improving? Is there new information that could maybe help some of the Tesla short sellers to reassess their thesis? Just asking the question. So what's the lesson here? Well, quite simple. First of all, if new information comes to light, new information that could change your investment thesis. For example, a few years ago, you think there's no way this company could keep executing really well, driving the stock price higher, and then the company does execute really well and drive the stock price higher. It's okay to change your mind. If new information comes to light, it's okay to change your mind. I know it might be scary, it might hurt a little bit, might damage your ego, but it is okay to change your mind. That is, of course, if you actually have a mind to change in the first place. If you don't have a brain between your ears, it might be difficult for changes to occur within that region. I understand that. The second lesson is even more important. When you're investing, you must leave your emotions at the door. Now, I'm hypothesizing here, I don't know for sure, but my suspicion is that poor Timmy Seymour has clouded judgment because his emotions are overpowering his logic and reasoning faculties. Given the fact that Tim Seymour has referred to people as, quote, tree huggers, I suspect that he has a little bit of a negative view towards anything to do with clean energy, electric vehicles, renewables, etc. Maybe it's even possible that some of his assets happen to be in the oil and fossil fuels based industry. I don't know that, of course, I'm just thinking out loud. The point is very simple. If your emotions are in charge, you are prone to make very poor decisions, not just when it comes to investing. In my opinion, Tim Seeless and many other Tesla short sellers are stuck in yesterday looking in the rearview mirror thinking, wow, Tesla doesn't make any money. They make a shit ton of money. That's change. That's new information. But let's just ignore that. They're also looking, oh, they're only an automotive manufacturer. Let's ignore energy. Let's ignore software. Let's ignore AI. Let's ignore everything. Yep, they just make cars. Therefore, they're an automotive manufacturer. Therefore, the stock's overvalued. Forget the fact that they already have industry-leading margins just within automotive. And totally, let's just ignore the trend. F the trend. Who cares about what's going to happen in the future? Let's look backwards. That's a good way to assess this company, isn't it? At some point in the future, surely, even the dullest of dull are going to figure out that Tesla is not just an automotive company. But I guess some people are slower than others, and as Gene Munster pointed out, maybe a few people are going to need to wait on the sidelines until Tesla can prove themselves first. Like I said earlier in the video, while some people are waiting on the sidelines for Tesla to prove themselves, I'd rather engage my brain just a little bit and try to infer what's going to be happening in the future rather than waiting for the future to arrive. A little bit of food for thought. Oh, and by the way, guys, just for a little bit of fun, let me know in the comments below, do you think Tim Seymour is still short Tesla stock despite all the PTSD he's suffered as a result? I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. And don't forget the BlockFi Bitcoin Rewards credit card, where you can earn 1.5% Bitcoin back on every purchase. There's a link in the description. You can also earn up to $250 in crypto bonuses when funding a new account on BlockFi, also linked below. And finally, don't forget your free stocks with WeBull and Stake, also linked in the description. These great offers also help out the channel. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.